Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Happy Halloween! I hope you all are enjoying the holiday, or if you have kids, your kids are enjoying it. Uh, we have some action going on in the market today. Day after the Fed day, you got a big night of earnings, actually a pretty big morning too. So we have some action going on to keep us all interested, right? Apple, easily the biggest name to report last night. Numbers were fantastic, but I'm sure some people are kind of frustrated maybe by the action today. And uh, if you've if you follow me or if you are an options and play member, then you kind of know how I look at Apple or look at trades like Apple. I call them trending stock trades. Kind of self-explanatory, right? Stocks when they're in like very strong or very weak, well-defined, steady trends. Those to me kind of fall into like that category of the trending stock trades. And Apple, really no stranger to this. This is actually like the third quarter in a row that it had kind of like a similar setup. And you can see over like the last 2 months, really, um, the stock just performed absolutely fantastic. I mean, it broke out, right? So when it finally got back through like the high from earnings at the end of July, you can see it just built like a really tight base above it, 8 EMA support, 20-day support, and the stock just took off running. I mean, it just rode the 8 EMA higher for about a month straight, right into earnings. Had like a maybe like a marginal pullback, like the day and a half, like 2 days to one day before. But overall, I mean, just a very one-sided trade. Performance was great. Held multiple higher levels. Just rode the 8 EMA higher, rode the 20-day higher, and what happens is, and why those trends get built and why they continue to kind of play out is because expectations get very one-sided, right? Performance gets very one-sided. A lack of selling interest, a lack of people wanting to short, people just kind of like sitting, right? You had numerous upgrades, numerous price target increases, people talking up the estimates, right? So it just creates like this one-sided move where it doesn't have the element of surprise, right? I mean, it removes that element of surprise going into like earnings, and earnings kind of operate around like that element of surprise, or in some cases, like a technical setup to me. So when there's really not a compelling technical setup because it's just kind of straight up riding a trend, and there's really not much potential for surprise. I mean, yes, if the numbers were horrible and they missed by a mile, then I'm sure the stock probably would have gotten hit. But to be honest, I mean, there was really no reason to expect that, right? Because the last two quarters were good. It seemed like everything was lining up for like another good quarter. So it just there was really no element of surprise remaining in the stock, and then the stock had like a run in anticipation of that. So when they beat last night and raised guidance, well, the stock really isn't doing much of anything, right? So going in, they were pricing in about I think it was like a little over 11, so say like 11 and a quarter, right? And the stock has moved about three. I mean, at the high of the day, maybe it's moved about like 4.5 to 5, but obviously nowhere near what it was anticipating, right? What the options were anticipating. So it's just like a massive crush on the implied volatility, right? Premiums of the options, and you can see that it happened. It played out a little bit different, but you had the trending trade, right? Popped in August and then sold off, and then it did almost the exact same thing in April, May, when it popped and then immediately sold off. So this time around, I feel like people just kind of wisened up. They didn't really want to chase it higher when it just reversed pretty quickly the last couple times. So to me, going in, this is an avoid. Um, Most trending stock trades, you'll see that I tend to avoid them, and it's because of that reason. Expectations very one sided. You get kind of like you get like higher priced options because Apple keeps pushing and pushing and pushing, but overall the volatility in the name is lower, right? When stocks are in lower and tight trends, you have lower volatility. So not compelling technical action, overextended, lower volatility, one-sided expectations, and that's why I like to avoid those, right? So it's not just Apple; it's like any stock. that's in a trend. You'll see me more often than not avoid those setups. Maybe, there could be other circumstances where I might still step in. Maybe if there's like really high short interest, or maybe if there's some other expected news, right? Maybe some other catalyst on top of earnings. Um, but if you wanted to play this, and maybe like it's something like you wanted to be involved with, how do you go about doing that, right? Well, there are ways from like a debit perspective, right? So I'm not going to talk about like selling premium. Like I'm only going to talk about debit strategies. So calendar spreads, okay? So if you sold near-term premium, so like this week's options or next week's options and bought longer dated calls, right? So basically, when a stock is in a trend, you're basically thinking that it remains in that trend unless there's something to really break it, right? So there's really no reason to think that Apple can't remain in its trend. The numbers were great, action's still solid. So what you were thinking, it would be like, sell near-term premium that's elevated due to earnings in favor of a longer-term strategy, right? So like the near-term premium offsets the price of the longer dated calls. So you're thinking maybe it doesn't have a huge move, but it continues the trend after the earnings, right? Or you could look at call flies, right? So these are all bullish strategies I'm going to talk about, but call flies, because those are a way to get closer to the money, take advantage of higher implied volatility, right? But you really need to like narrow down the window of those flies, or even like something very long term, or maybe not very long term, but longer term strategies, so like a longer term call spread, longer term options. They're going to smooth out that higher near term implied volatility, just because by their nature, long term options have lower implied volatility versus near term options. That's just how the trades are structured. So you got to pay more for time value, but at the same time, the implied volatility is going to be lower. So if you don't see a huge move, they're going to hold on to their premium better than those short term options. All right. Um, so I hope this was helpful. I talked about Apple and the earnings on the radar video, so I hope you kind of got an idea from that video that I really didn't want to do anything with it. Um, but it is still going to be a name and play. I'm sure there's going to be a trade coming, or it's going to set up for a trade opportunity. So I'm definitely going to continue to watch it. Just there wasn't like an earnings trade for me. All right. So if you like this video, or if you like any of these videos, please follow up with the link in the description for more information about options in play. I hope you all have a wonderful night. Have fun trick-or-treating if you're going out there. And best of luck with all your trades, and I'll talk to you all tomorrow.